has dissipated as we've moved closer and closer to the election. Bloomberg Chief Washington correspondent Kevin Cirilli joins us right now. Kevin, for several months you and I have had this conversation, and for many people you and I speak to, they've said the same thing. It's not a matter of if, it's when this happens. Do we need to question the when now?
No, I don't think we do, in the sense that in conversations I've had this week, they're looking like there's going to be a lot of emphasis placed on coming to fruition the stimulus by the end of the month. And should that fail in the lame duck session in November or December post-election, there will also likely be another opportunity for lawmakers to do this. But still more impasse this morning. We're getting fresh reaction from Senate Minority Leader Chuck Schumer, who says in a statement, quote, "The Republicans are now moving even further in the wrong direction. Their proposal appears to be completely inadequate by every measure." He goes on to say that Leader McConnell and Senate Republicans would be making another unacceptable and ineffective attempt at providing relief. So a non-starter red line coming there from Leader McConnell. We should also note the impact that this is having on the 2020 presidential. A Quinnipiac poll has Joe Biden leading nationally, but dig closer into the swing states. North Carolina, an incredibly important state where President Trump traveled to yesterday, has the president up 2 percentage points in, according to an East Carolina University poll, clearly well within the poll's margin of error. Yesterday, I spoke with Mark Lauder on Bloomberg Radio. He is, of course, one of the top communications advisors on the president's re-election campaign. They're looking to make inroads in Minnesota. This is the Biden campaign eyes Arizona, so a changing map really at play here.
Kevin, what's driving the timing of the last several weeks?
Well, in terms of the timing of the last several weeks, I think that the dominant issue is just how quickly the dynamics of the pandemic are shifting. Yesterday, of course, that report that the CDC is instructing states to prepare for a vaccination implementation as early as November 1st. A nonpartisan group of medical professionals advising the federal government on who ought to get the vaccine, markets eyeing the vaccine, the public eyeing the vaccine, employers eyeing the vaccine for bringing people back. We're entering into a new phase of what a recovery looks like once that science catches up.
Kevin Cirilli, great to catch up with you, sir. Kevin down in Washington, D.C., 15 minutes away from the opening bell in New York City, with equity futures down 18, call it 19 points on the S&P. We're down 0.5%. The underperformance, it comes from big tech. The NASDAQ futures getting hammered going into the cash open this Thursday morning. Going into the election 2 months away, Jim Bianco of Bianco Research seeing November's election as a risk to markets, writing the following. Recent data suggests the election will be much tighter than most expect. The markets may be caught off guard with either a Trump victory or if Republicans hold on to the Senate. Jim joins us right now. Jim, where's the market risk for you, and what do you think is underappreciated?
I think a lot of people are looking at the polls when it comes to the election, and they're concluding what the polls tell us, which was 3 weeks ago. And we've had 2 conventions, and we've had some protests, especially in Wisconsin. And if you look at the betting markets, they've made a big shift that they think that the election is a dead heat right now. And I think that people are slow on the uptake to say that this has gone from Biden lean to more of a dead heat. Now, that doesn't mean it can't change again. It probably will in either direction, but it is tightening up. It is before Labor Day. There's still 60 days to go. And I think that people that were expecting a blue wave or a solid Trump loss, it could still turn out that way. But as of right now, I think it's a lot closer than we think.
Jim, that's largely because the conversation has shifted away from addressing the pandemic to securing the cities. You've got to anticipate what the big topic will be going into November. Often what happens is you and I talk like there's a single issue that dictates the whole election and then the election goes the other way. But for you, what do you think is the big issue as we count down the next 2 months?
Oh, I think that there's going to be a number of big issues, and I'm fond of saying that the election will turn on events that haven't happened yet and that we can't almost predict. Witness what happened in Wisconsin last week as well, too. But away from that, I do think that the big issue is going to be the economy and whether or not the recovery that we've had since the first, second quarter lows will continue. Evidence is that it's stalled right now. And what's masking that is the stock market rally. Kevin Cirilli was just talking about whether or not we're going to get a fiscal stimulus deal. And I've worried that the big holdup is the stock market makes new highs, and it sends a signal to Washington. There's no hurry in putting together fiscal stimulus because everything must be okay because the stock market is making new highs, where I don't think that's the case at all. I think that what the stock market is doing is more about what central banks are doing and about liquidity. And what you see in the numbers, especially the ADP number coming in way below expectations yesterday, is more about a stalling recovery, not a reversing recovery, but a stalling recovery. So how that is perceived over the next 60 days, I think, is going to be critical in determining the outcome of the election.
Jim, the tail's wagging the dog. I'm with you on that. But just looking at markets, it just feels like many people are making it up as they go along. We came into August, closed out July. Everybody said the same thing, Jim. I'm using everybody a little loosely, forgive me. Most people said the same thing. If we don't get a fiscal package, the market's in trouble. We had a huge August, no trouble at all. We're coming to September with the same attitude, Jim. What do you make of that? Does the fiscal package actually matter to some people out there, in markets at least, and markets specifically, in the way that many people anticipated it would?
No, everybody said it, including me. I thought the same thing, too, that if we didn't get a fiscal package in August, that it would stumble the markets. But what we've learned in the month of August is there are the inputs and the drivers of the markets, and there are the inputs and the drivers of the economy, and they may not overlap as much as we think. What we got in August, actually, was a Federal Reserve that changed their mandates to become way more accommodative and allow for a lot higher inflation rate and signal that they are going to stay as easy as they possibly can for the foreseeable future. And that might matter a lot more for markets than whether or not we get a fiscal stimulus that will help push the economy forward. That helps for Main Street, but not necessarily for Wall Street.
Yeah, Jim, I mentioned this on the show a little bit earlier with Tom Keene and Lisa Abramowitz. It was something that Lloyd Blankfein had said on a podcast in the last couple of weeks, and something you and I have actually talked about, that you could have received every single data point, every single input, every single policy response at the start of the year for the year to come, and you probably wouldn't have called this market. We're down today, but we're up big time on the NASDAQ through 2020. Jim, how can you explain the moment we're in if you couldn't anticipate it at the start of the year, even if I gave you every single data point you needed?
Not only that, but even if I gave you the data points of the virus count that peaked in late July, you would have never predicted what we've seen going right now. I mean, the simple answer is you really couldn't have. And what you needed to kind of come to the realization of is that market liquidity matters a lot more than we thought. And the Federal Reserve and the federal government, let's not remember, President Trump has tweeted out many times that he was going to bail out just about every industry that was in trouble back in the spring and summer, that mattered a lot for investors. And one last thing I might add, and Chris Harvey mentioned this in your previous interview, there is a froth going on in the options market right now. There is rampant speculation in equity listed options, and that might be feeding through into this market. So if you're looking for that, maybe some of this has led to a froth, you might have a hard time finding it in the stock market. But look at what's going on in the options market. It is really raging like it was the bubble peak of 2000, if not greater.
Jim, you think it's that bad right now, some of the activity that you're seeing?
Yeah, I mean, you've got 75% of the trading in options is less than 2 weeks to expiration. The majority, maybe 2/3 of the options, is small traders right now. They tend to be very momentum driven and price insensitive as well, too. You've got a break with the VIX index, which is the volatility index, with other traditional measures like the move. And that, I think, is just because of the rampant speculation that you've seen in the options market. So how is all of this liquidity manifested itself? We all look at the stock market going, is it here? Is it here? I think it's in the options market, and it is showing up a lot in a lot of these high-priced tech stocks. That's another way that people will play a $2,000 or $3,000 stock price, is they play it through the options market because the premium prices are lower.
Well, Jim, let me ask you this question just to wrap things up, because I asked it of Chris, but I wonder if you've got a different perspective on it. The high yield rally has just stalled out a little bit. It's not a sell-off. Spreads aren't wider. They're just not tighter through August in the way that this equity market rallied. What do you make of that, Jim?
Yeah, I'm a little worried about that as well, too. Remember, you have got a price-insensitive player in the high-yield market in the Federal Reserve, at least in the fallen angels category after March 22nd, and in the investment-grade area. And that should be really pushing the market forward, and it is stalling. Now, I'll go back to Chris, and he mentioned a lot of that is in energy, and a lot of that, about 13% of the index is energy. It's a big player in casinos and stuff, and they are struggling because they're more tied to Main Street, and they're just not getting the traffic. So maybe the high yield market is giving us a signal, like the real economy, that things are stalling, not reversing, but stalling. But the stock market, it's just all steam ahead because of liquidity.
It's been on fire through August and into September, that's for sure. Jim, great to catch up with you, sir. Jim Bianco there of Bianco Research. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. And later, BMO's Brian Bowski back on the programme. Looking forward to catching up with an old friend. 6-7 minutes away from the opening bell in New York City, with equity futures down 21 on the S&P. We're negative 0.6%. And the Nasdaq taking a rare beating. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Equity futures down 21 on the S&P. Here are the morning calls this morning. Berenberg upgrading FedEx to a buy. The analyst signing the stock's underperformance versus its peers. Morgan Stanley upgrading Eli Lilly to overweight. The analyst citing underappreciated earnings growth. And finally, Deutsche Bank upgrading both JP Morgan and Bank of America to a buy. They're three of the calls this morning on Bloomberg TV. The opening bell's up next. This is Bloomberg.
Dez horas e 29 minutos, abertura mercado americano.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The opening bell 20 seconds away in New York City, with equity futures down 22 points on the S&P 500. We are negative 0.6%. NASDAQ futures taking a rare beating. We're down 185 and negative 1.5%. That's the equity market. Switch up the board and let's get to the bond market. 23 hours away from the payrolls report in America, with yields coming in just one single basis point to 0.63%. Call it 0.64 on a US 10-year. And there's the move in foreign exchange we've been talking about the last couple of days, from 120 down to 118.46. Very close to breaching 118 earlier this morning. 120 on euro dollar, and then a nice shaped ECB slap from the chief economist Philip Lane, who does not want it there. 118.48, actually the euro making a comeback in the last couple of hours, so keep an eye on the FX market. Crude lower, we head south by 2.5% on WTI, $40 and around about 50 cents. So that's your cross-asset setup at the opening bow this Thursday morning. With your movers at the market desk, here's Abigail.
John, we have lots of movers doing something that we have not seen in some time, and that is moving to the downside. Let's start out with the shares of Campbell's Soup. They put up a pretty solid quarter, beating both top and bottom line estimates. However, the growth that they're expecting, not quite as much. They're talking about unprecedented demand during the virus. So in the last quarter, comps were up 12%, but that's versus the third quarter up 17%. And in the current quarter, they're looking at healthy 5 to 7%, but still investors wanting more. Another case of missed expectations, Sienna, the networking company, they beat adjusted earnings by 28%, but they are seeing demand slowing down. Software sales up 20%, sounds great, but again, missing estimates. So that stock is really plunging on the day, down 27%. And same deal with Rocket Companies. Of course, this mortgage company based in Michigan, they IPO'd back in August. Between August and yesterday, up more than 90%. Today, down 12%. The second quarter underwhelming, analysts saying that the market share is questionable and valuation is too high. Now, speaking about sky-high expectations and too far, too fast, let's take a look at Tesla, Apple, and Overstock. Lots of selling pressure here today, similar to yesterday. Tesla's second biggest holder yesterday, Bailey Gifford, cut their stake, now a little bit above 4% from almost 8%. This stock, as you know, John, between the March low and the recent high, up more than 600%. So again, too far, too fast. It's a similar deal with Apple. The technical is very, very stretched there into this week, of 65% above the 200-day moving average, which is a way of saying that investors too far over their skis. That is truly the case for Overstock.com. This stock into the highs from its March lows, up more than 4,900%. So investors taking some profits there. This, of course, is the White House is really pushing for a vaccine, John.
Absolutely incredible. Abigail, great to catch up as always. Abigail Doolittle coming up a little bit later on some of the price action sector-wise. In the market right now at the index level, the S&P 500 down 0.6%. There it is on the NASDAQ, down 1.48%. Big tech taking a beating. Tech showing just a little bit of weakness after driving markets to record highs. A rotation may be starting to take shape. Chris Harvey of Wells Fargo weighing in just moments ago on this program on some of the profit taking in the high flyers.
We want to start taking profits. We want to begin to rotate. And at some point, we will want to become more defensive, but we're not there just yet. We're still getting ready to get ready, but we are taking this opportunity to rotate and shift into situations that are less picked over.
with the latest on this, Bloomberg's Scarlett Fu at the market desk with us for more. Good morning to you, Scarlett.
Good morning. Getting ready to get ready. President Trump said something about winning, and I'm going to paraphrase it here and apply it to the stock market. Tech shares are winning so much, people are sick and tired of it. It's no longer exciting to win, yet it's going to keep winning whether you like it or not. And despite the pullback that we've seen today, that's the story for big tech overall since the pandemic began. The likes of Microsoft, Apple, Amazon, Facebook, Alphabet, Tesla, you name it. They've been getting bid up for their all-weather characteristics, growth, quality, and defense. You see the NDX rising 11% in August. Few down days in there, only 4 declines since August 11th. Now, take your pick when it comes to measuring how extended this rally is. Dave Wilson has a chart today that shows the annual performance gap between the Russell 1000 growth and value. And year to date, that gap is at 42 percentage points. If it holds through the end of the year, that would make it the widest ever, going back to 1978. During the dot-com bubble, the widest it got was 27 percentage points in 1999. Now, John, there are some signs that this lopsided rally out of steam. You look at a pair of growth ETFs from Vanguard and iShares. They are seeing their biggest monthly outflows, at least in August. This is VUG and IUSG. But in the end, performance always wins out. And Tom Serafagis of Bloomberg Intelligence says investors may still like growth and favor it, but they're expressing it in a less generic way. They're targeting tech ETFs as opposed to growth ETFs. So the Qs and ARK-K, which is Cathie Wood's innovation ETF, saw big monthly inflows. It's not as if investors are dumping out of tech entirely. John?
Scarlett Fu on the latest. Great work as always, Scarlett. Thank you. 5 minutes into the session, your S&P 500 lower by 0.6%. The Nasdaq down hard, off by 1.72% on the Nasdaq on my screen on the Bloomberg right now. Brian Bowski of BMO reinstating his 36.50 year-end price target on the S&P, saying the bull market thesis is alive and well, writing the following. Stocks are telling us that a pivot from chaos to coexist is well underway, and investors should act accordingly. As such, it is extremely difficult in the current environment to employ a market forecast ruled by traditional academic variables. Brian Bowski, an old friend, and I'm very happy to catch up with, joins us right now. Brian, fantastic to catch up with you, sir. Let's just start with that one line at the end of that quote. Forecast ruled by traditional academic variables. Brian, what's changed?
Thanks, Jonathan, for having us, and it's an honor to be on your program and the network again. Here's what we would say. We've been publishing a market forecast for the S&P 500 since 1997. And our process, as we like to say in Canada, process, by the way, is really ruled by dividend discount models, discounted cash flow models, PE models, and macro regression models. And all of them have been wrong, especially the macro regression model for the last couple of years, and in particular the macro models that we look at that look at traditional economic variables, which you know and I know, and I've been telling
Bom dia, Alexx Scalper na área. Eu tô só passando as ideias aí, a leitura, tá? E estamos ouvindo aí a Bloomberg, vendo as notícias, abertura do mercado americano também. Mas fica à vontade, pode fazer pergunta. Tamo aí.
That $160 number was what we actually expected for calendar year 2020 when we suspended our target on March 23rd. Exactly the same note in writing on the front cover of the report, Jonathan, where we said stocks would rally 40 to 50% from the lows on that day. Now, a lot of people are claiming they called the bottom.
Com relação à nuvem ali, né, que você tá, o Wanderson, não conheço, mas é uma coloração, né, que a gente no setup Samurais criou e a gente utiliza. Então é um programa que foi feito para poder na estratégia utilizar, tá bom?
Because as many people, as you know, would come on programs like this and talk down the United States and talk up the recovery starting to take place in places like Europe, China and Asia, EM and elsewhere.
A gente já entrou no dólar, já saiu, mas o dólar vai voltar a ficar para alta aí já. Ele tá já caiu 3%. A qualquer momento vamos esperar o índice bater lá em cima, se subir. E vamos entrar comprando dólar daí, tá? Se o índice bater lá 102,600, aí a gente vai analisar o dólar para entrar numa compra aí. Eu vou deixar um alarme lá no dólar já.
remember, we've got to call for a 20-year bull market. And so because they missed this and under-allocated the U.S., some of them are chasing the market and actually have missed out the opportunity and underperformed because they missed the first 10 years. So I really believe that March 23rd was the Control-Alt-Delete as you reset for the next 10 years. And I do believe that global centralized growth is going to be part of the 20-year bull market, but not for 3 or 4 more years. Emerging markets in Europe have to get their fundamental ship in order, and we're clearly not seeing that. Lastly, on this note, Jonathan, we'd like to warn investors from playing the playbook that they played 10, 11 years ago. After the credit crisis and the great financial crisis, we had financial stocks lead for 6 months, and then cyclicals, deep cyclicals, and emerging markets and commodities took over again. They took over again because in a very correlated pullback, which 2008, 2009 was, everything went down together. But what came out of that, it outperformed were oil and emerging markets. So we jumped on that trade again. So many investors that we speak with around the world, Jonathan, are trying to play that trade again, whether or not it's industrials or energy or emerging markets in Europe. Quite frankly, it's not the same type of fundamental environment. We would caution investors by being that academic and playing that playbook again.
So, Brian, you're touching on something really quite critical, and let's finish on it because I think it's important. You've called this 20-year secular bull market. We've had the first 10. Let's talk about the different characteristics of the second 10 compared to the previous 10.
It's a great question, and thank you so much for asking it. Remember, much of the last 20 years since the tech wreck in 2000 has been dominated by quantitative strategies and macro strategies. We think it's going to be dominated the next 10 years from bottoms-up stock picking, from company managements to products and services. From every great recession and every great bear market, we've gone from despair to hope. The hope is new technologies, whether or not it's Zoom technologies or new restaurants or new consumer discretionary and retail concepts to new technology concepts or to new vaccines, new healthcare. America is an economy and stock market of growth and innovation. We think that's going to drive things. We think, oh, by the way, Canada is going to come along for the ride as well. So it's going to be stock picking, Jonathan. It's going to be good old-fashioned fundamentals. And those that can embrace that and continue to go back and focus more on macro, academics and quant will continue to hate the stock market and continue to underperform.
Brian, can you not leave it so long next time? And next time, can you come back with the research piece and you can just hold it up to the camera and just show the world?
We're humbled by your great grace. We're very gracious for your help today, and we're here to help everyone. So thank you very much for the opportunity.
Well, I've enjoyed the conversation, Brian. It's good to see you, sir. Brian Bowski there of BMO. Let's get back to the market desk and get you some movers, shall we? We're down 0.6% on the S&P with the price action. It's Scarlet Fu.
Yeah, and the Nasdaq off by 1.7%. That looks like the biggest drop, I believe, since July 23rd. I'll go back and check that. But it is rare to see such a big sell-off in these tech names. Let's start with CrowdStrike, the cybersecurity company, falling even after a beat and raise. The revenue number topped the most bullish estimate, but the shares are up 40% since mid-August. And analysts note that there's concern over whether it's reached peak growth, especially after the second quarter was reliant on a big deal. Now, Zora saw a second quarter beat, a mild beat, but that showed growth was the slowest since the IPO. So the outlook is paramount and the outlook disappointed. NVIDIA leading chip makers lower, off by 5% right now. Bloomberg reporting that China is planning to internalize production, basically develop its own semiconductor industry. Keep in mind as well that NVIDIA was up 14% over the last 4 days. And Broadcom will be reporting after the market close. The stock currently off 3.5% before those numbers due out after 4 p.m. We'll be all over it when they come out. John?
I look forward to it, Scarlett. Thank you. Scarlett Fu there on the market desk. Coming up on this programme, more US economic data crossing the wires. We'll be catching up with John Hancock's Emily Rowland. She'll be joining us to break it down alongside Bloomberg's Michael McKee. The PMI's up next, the ISM a little bit later. As we look at this market, this price action, 12 minutes into the session, we are down on the S&P by 0.7%. As Scarlett points out, though, it is all about the Nasdaq. We're down by 1.9%. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
You lead Novartis. How has it shaped the leader you've become in dealing with this pandemic?
What I find to be incredibly valuable in a situation like this is having that breadth of experience leading large organizations.
"15 minutes into the session, equities down 0.75% on the S&P 500. On the Nasdaq, we're negative 2% with the data. It's Bloomberg's Michael McKee.
Everybody anxious to know where the economy is going, and we get a little bit of a mixed picture. Services rise to 55 from 54.8, a very small increase, but a little bit better than the 54.7 expected. However, the composite index drops by a tick, 54.6 from 54.7. So probably the best we can say about the U.S. in terms of the market estimation of it, their PMI numbers, is that it is relatively stable. We did see in Europe today a number of countries see drops in both their services and composite numbers. Really only Germany, the only one that saw an increase. So what it tells us is that the rest of the world, including the United States, we can say, is still struggling to get going, to get some momentum going in the economy. We're better off than we were a month ago, but we're not all that much better, and we seem to be losing some momentum.
Mike, the ISM coming in about 14 minutes' time. What are you looking for, sir?
Well, people are looking for an increase there. The services ISM for the U.S. has been a bright point. It was 58.1. The consensus is we'll see a small drop to 57. We'll see if that holds. They don't do a composite there. But the services industry number is very important because it's what makes up most of our economy, about 80% of the economy at this point. And we'll also look at the employment sub-index because we want to know what that might mean for jobs tomorrow.
Ahead of that payrolls data tomorrow morning. Mike, great to catch up. Michael McKee bringing you that ISM at the top of the hour alongside Alex Steele and Guy Johnson. That show starting in about 14 minutes' time. The price action set up as follows about 16, 17 minutes into the session this Thursday morning. We are down 0.7% on the S&P. The Nasdaq taking a beating. We're off by 1.9%. Emily Rowland of John Hancock saying she's still betting on US growth, writing the following: there may be a global economic divergence developing once again. As a result, we remain with a slight overweight of the United States versus Europe and Japan. Emily joins us right now. Emily, this has been the story through the summer. Many people expecting the recovery to fade as we worked our way into August and out into September. That hasn't materialized, Emily. Why do you still have the conviction that it won't?
Yeah, we are seeing a little bit of a, and by the way, welcome back, John. We all missed you very much when you were on vacation. But, we have, seen a bit of a leveling off as far as the data goes. And certainly the PMI data that just came in is evidence of that. But one really key element of this that we're watching is just the divergence here in the U.S. versus what we're seeing overseas. And we've started to see some softness in terms of PMI data overseas, particularly on the services side, and countries such as, Italy and Spain, which are reliant on tourism, weakening. Areas like Germany, a bit of a bright spot. But that has really key implications in terms of where you want to be invested from an equity market standpoint. And it's been a key reason that we've held in on our overweight to U.S. equities since mid-2019. Even though we are leveling out here a bit in terms of economic growth, it still looks like a better picture here than it does overseas.
But Emily, you think this is more than just a tech sector and a heavy tech sector weighting on the S&P 500? Do you think it's more than just that?
Yeah, I mean, that's, of course, a big part of it. And we talk a lot about sort of relative sector composition, the fact that Europe is so dominated by financials and other cyclical sectors of the market. But there's a couple other elements here. We do certainly look at the fundamental backdrop, but economic divergences are key here. The one thing that's a little bit confounding to us is the fact that you continue to see this weaker dollar environment play out. We're seeing better relative economic growth slightly here in the U.S. You're seeing, a slightly higher rates, of course, here in the U.S. We think that should lead to capital flows here domestically, which should put upward pressure on the U.S. dollar. So we actually haven't bought into the narrative that we're in for a prolonged period here of dollar weakness. And in fact, the dollar may be a bit oversold if you sort of think about what's developing in the macro landscape.
So, Emily, walk me through how you'd play the FX story. Would you do it directly through foreign exchange? Would you do it through dollar-denominated assets? How are you thinking about making that trade, Emily?
Sure. So one area that we've started to embrace more is emerging market equities. If you look historically at periods of weaker dollar regimes, that has been an environment that's been great for emerging market equities. So we removed our underweight there, but we're staying underweight Europe because if you look at the composition of the companies in the MSCI EFA index, about 55% of their revenues are derived overseas. So they're actually not benefiting as much as emerging market equities are from this weaker dollar story. Gold, of course, is another way to play the weaker dollar environment. But in our view, sentiment's a little bit stretched there. We're starting to see that trade fade a little bit. So from the equity side, I think EM is the way to go here.
Emily, just a final question from me. Where does the election feature in all of this with 2 months to go?
It doesn't. So I know there's a lot of conversation about sort of handicapping the presidential election. When we look at this, the macro environment has been so much more important to what's driven stock returns. Just looking at the last two administrations, Trump and the second Obama administration, you look under the hood at intra-market performance, it's almost exactly the same. You have tech and growth on the top. You have energy, value, international at the bottom. You have S&P 500 returns almost identical. And the reason for that is we've been in this low growth, low inflation, low interest rate environment through both of those terms, regardless of vastly different political policies that have been pursued. So we continue recommending, emphasizing economics and earnings data and trying our best here, even with 60 days left until the election, not to overplay politics as an input into making asset allocation decisions.
Emily, thank you. And can I say that I missed you too? I really did. Emily Rowland, great to catch up with you. As always, thank you very much. 22 minutes into the session, equities down 0.6% on the S&P 500, on the Nasdaq down by 1.75. Let's get back to the market desk, shall we? Get you some sector price action. Here's Abigail.
John, very interesting day here sector-wise, because I can make the case that despite that 0.6% decline for the S&P 500, it is modestly risk-on sector action. Let me show you why. If we go into the Bloomberg terminal, you will see more sectors are actually higher than lower, so that is in and of itself risk on. But up top, importantly, those cyclical and growth sectors getting a big bid. Financials up nearly 2%. Energy up 1.5%, despite the fact that oil and yields are actually down. Typically, you would see energy and the financials trade in the opposite direction. We also have the industrials up there. As for what is lagging, it is this year's stay-at-home defense trade. Communication services, discretionary, and tech, all of those mega caps are down in a big way. On the year, it is an interesting reversal of today, as you know, though, John, because on the year, we have tech up nearly 35%, up more than 35%. Discretionary being helped out by Amazon up 29%. On bottom, energy in a very bad bear market. Financials down 16%. So you could make the case on the year that the sector action remains defensive with tech up top. Today, though, again, a little bit of a bid for those cyclicals on the day.
Just a little bit of a change, though, Abigail, you and I have had that conversation multiple times over the last couple of months, and it hasn't stuck. Coming up on this programme, the market, moving events you need to be watching. That'll be coming up next in our trading diary from London this morning. For New York, it is the morning. Good morning to you all. With equities drifting lower by 0.7% on the S&P 500 and your Nasdaq down by 1.9%. This is Bloomberg TV.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
Five minutes into the session, equities lower by 0.7% on the Nasdaq, off by almost 2%. Here's your trading diary. ISM services data at the top of the hour. Chicago, Fed President Charles Evans speaking at noon Eastern Time. President Donald Trump delivering remarks in Pennsylvania at 7 p.m. this evening. And then finally, the main event tomorrow, the payrolls report in the United States of America. Before I wrap up, a thank you from me for the outpouring of lovely welcome back messages for myself on Twitter at Ferro TV. Some of them more special than others. I only make money when Ferro's riding the desk, that beautiful, bold Brit, Prince Cash. I guess it takes all sorts. I might put that in a promo. Coming up tomorrow, here's a promo for you. The payrolls lineup right here on Bloomberg TV. Mohammed Al-Arian, Rick Reeder, Michael Collins, and then, of course, at the White House, Larry Kudlow. For our audience worldwide, with the payrolls report around the corner, this is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade.
Is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only...
Eu sempre achei que a falta de dinheiro ia atrapalhar a realização do meu sonho, ser uma programadora e desenvolver grandes soluções de tecnologia. E foi aí que eu descobri o Educa Mais Brasil.
Ô mina, seu olhar me fascina. A mudança é notável, contigo eu quero uma família. Nós dois na piscina, rolé de 30. Só com esse dinheiro de rima. Nosso beijo, eu desejo mais um trecho. Eu escrevo, você tem o dom. Sei também é tão bom. Motivo maior pra eu parar pra fazer esse som. Já passou, mas foi cruel. A subida foi longa e hoje nós saiu do aluguel. No passado eu não era ninguém. Prometi pra mim mesmo que podia além de ser amém. Me julgaram, sai daí mano, tu parece um retardado. Ainda bem que você levou fé. A demora é só sua pra ser minha mulher. Yeah, yeah, yeah. Eu quero você até depois do amanhecer. É foda te esquecer. Sentimento florescer, yeah. Te deixar louca de MD, yeah. Wow, yeah, yeah, yeah. Faço acontecer. Primeira vista uns falam que não existe, os que param no caminho e na dúvida desistem. O preço da vitória eu sempre vou pagar. Tamo junto contra o mundo e nada pode parar. Ninguém vai desfazer de eu e você. Pode pá que ninguém vai desfazer de eu e você. Eu paro pra pensar, menina, seu brilho me ilumina. Segurando e jogando essa bunda de baixo pra cima, aumentando esse clima, gigante autoestima. Se acha que eu mereço, então vem por cima. Vários planos, muitos anos, maioria das coisas que nós concordamos. Já caí, mas hoje tô de pé. A demora é só sua pra ser minha mulher. Yeah, yeah, yeah. Faço acontecer. Vamos nessa pra crescer, com a força de vencer. Ninguém vai desfazer, só tenho a agradecer. Yeah, wow, yeah, 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 yeah. Eu quero você até depois do amanhecer. É foda te esquecer. Sentimento florescer, yeah. Te deixa louca de MD, yeah. Menina, seu olhar me fascina. Menina, seu brilho me ilumina.